Hello, guys. Welcome to Traders Therapy Session. I'm your host, KRO, as always. Guys, today I'm going to try something different with you right here. I'm going to do the market commentary right here, guys. But if I see opportunity and it allows there is, sorry for that, guys. I hope I cut that. Guys, as I was saying, I today let me trade live with you with my voice on so that you can hear maybe my thoughts on things that I see, because on certain trades I do have live trades out there, but on certain trades I avoid to use my voice because I will also confuse myself talking about a lot of things that I see on a chart. So, guys, without wasting any time, anyways, there's no way to waste time. We've got time right here because we just got into lunch, and let me interpret or comment on what I see. So, this is lunch, guys. This is lunch. Let me start off by bringing everyone to this chart. I'm not going to erase everything and draw everything. That will take time because this has been drawn for the whole week. I guess we are looking at the bigger picture right here, and I will explain that soon. So I just see this interesting. So why not sharing it with you guys? I just see this thing interesting, guys. So let me just share with you what I see on the market, my thoughts maybe, and some of you who've been watching the live trades videos, who've been watching my videos, who wish to see how I do what I talk about, will then today see the thoughts inside, because some of you might grab the knowledge, but when it comes to applying it live, it's how do I put it? It's difficult because it seems like a taboo. So I'll be trading with you live, and guys, I need to take care of my emotions as well, because the reason why I avoid talking on my live trades is this. So I'll be commenting this market for you, and so hopefully maybe we might get a setup that will work our way on our way, so that we can prove this thing work. But and by the way, it was an NFP. We will still comment on that. Let me take just a minute, guys, and you watch the price. I'll come back. Okay, guys, let's watch the price and comment as it goes. Before we go any further, let me bring everyone in right here. Um, if you like to know deep in depth of what I'll be talking about, guys, I have just dropped 2023 mentorship. I would like you to go there, guys. And I am taking time uploading because I'm held up, but I promise before the end of this year, the course will be complete in a way that you will be able to navigate the markets by yourself without my help. So let me not waste any time. But if you do not understand at the moment, if you don't understand what I will be talking about right here, I will try, since we have time, since we are annotating live market. So I will try to explain certain things that I see, but I won't give you, I mean, like the um definitions or illustrations or demonstrations, rather maybe explanation, give you the rules of what I will be talking about. Because if you follow the 2023, I mean to say, bus driver model, I am trying to give you what I understand about this market. I'm trying to bring you to the level I am. I am not hiding anything from anyone, guys. I like to see what will happen here. Welcome to this. We're still on lunch. So, and I am not promising that I will be trading lunch, but lunch likes to perform since it runs for a certain liquidity. We'll talk about that. But from ICT, no one is advised to trade, and we are not advising anyone to trade their life funds. Let me put that disclaimer out there. If you want to join us, guys, to trade live markets, you are free to use a paper trading account so that you don't lose anything. You just gain the experience of the market. So, what I'm saying right here, what I'll be annotating, I'll give everyone the model, what is happening. So, I was at the disclaimer. Sorry, guys, to go back and forth. We are not advising anyone to trade their live accounts. Like I said, we trade the paper trading so that you don't make money or lose money. It's just the visual money on your screen. So you don't have to pay anything for that. And guys, you don't have to pay me anything. I am not supplying anybody with um, any signal groups that are paid for or any mentorship. The only current mentorship I would call, but I would say it's just a guide to drive to ICT, not necessarily a mentorship. What I'm dropping on 2023 bus driver model is the only thing that I'm drawing. I'm dropping currently, and it's for free, guys. It's for free on this YouTube channel. You are free to watch, comment. Since we are not many, if you drop a comment when you have struggle on certain things, I will get to you, and then I will maybe respond to you, and then on the next video, I guess, try maybe to respond visually on what you are talking about. And some of you, maybe we might create a relationship. I might bring you to my group, since we have called certain traits on the group. Positive vibes are happening, guys. So inviting more people on this YouTube channel so that we can have that as well, and look to go forward on bigger things as we move. Guys, I am not promising to say, I'm not lowering anyone to say, you coming in here, I will hide something so that I can give it to you during the when you buy the services that I will be providing by then. No, we're not doing that, guys. We're not doing that here. We're just giving this knowledge for free. If we provide any services, that will be me providing my time to you, but the knowledge, I'll give everything for free. If you want to ask, that will be maybe me, and it makes sense for me to charge you for my time. It's not that you have to pay for the knowledge, for everything that I drop. Even if when you pay me, I believe, and I'm not doing that I'm just thinking of doing that. I want to bring value to you guys. So, but I am not doing that. I'm focusing on 2023 bus driver model, and I want to bring proof from the people that will be learning, and you as well, guys, to be profitable on your visual accounts. When you go live, I am not involved. I'm not advising anyone, but just to bring proof to say this works. So if I sell maybe something, it will be me trying to be one on one with you. Maybe me trying to guide you, hold you responsible. That will be mostly part of psychology. If you want something deep, amen, trust me, you will get it on YouTube. And if you come to me paid for anything, I will teach you the same thing that I teach on YouTube. But I am not selling anything, guys. I'm still trying to pull myself up. So With that being said, guys, we'll be annotating the market. So if you've been following, guys, if you've been following from the market maker model, the one that I dropped, the market maker buy model, we are still on the model, guys. Let me just drive you here. I said I will not remove this analysis, hence I'm using them on another layout. So on a daily, basically we are focusing on this thing right here, guys. And what I'm doing, I don't have a script for this, guys. I'm just flowing. So you follow what I'm trying to give you, guys. This one I don't have to explain. You will watch on this video. I have this video, guys, where I explain each and everything that is happening right here. So you watch that video. Here I'll just have to summarize. Our main aim is to come here at this point and talk about it. So this TP, I removed it. It's somewhere here. I removed it due to some lower time frame there. So guys, we had an original consolidation right here, down sell side of the curve, and then buy side of the curve. So we were somewhere around, I guess we were somewhere around, was it around here when we were annotating this? Maybe somewhere around here. The video will tell right there, because I said I want to explain something that is close to the current price. I might delay you, but I will delay you with few days or maybe a week, but I will be focusing on the current market. Guys, I believe no mentors does that. I only saw from my mentors who are doing that, who are teaching me live market, and that will be the likes of Sean Lee from Astro FX. Well, he was teaching the live market on the course. Give it up for that. And then the second one who taught me, I would say, who taught me before ICT. The second guy who taught me how to trade on a live market. Okay, I will give that to Kenneth as well, to Tenfold FX, where I purchased the advanced technical trading course while I was trading retail. Guys, I have time to say this, guys. So we still have time until lunch before we get there. Don't worry. To trade live market, not to tell you about something that happened 3 months ago. If I have to explain that in the market every day you're supposed to see, maybe let's say for argument's sake for the retails, the bear flag, I'm supposed not to go to further than 3 days to show you the bear flag, because I'm saying that is occurring. Sorry guys, that is occurring on a daily basis. So I don't have to go to 2 weeks, 3 weeks and search for that. So what I'm trying to say to you guys, look for value, guys. Look for value, and you get to understand the psychology inside someone who's leading you. Let me not say the mentor. Somebody who's leading you to a certain skill of your life. So guys, you watch what is happening. I am not trying to be like ICT, guys. We know like ICT talks a lot on the market because he has time to explain, to give the psychology, but I'm trying to donate the 2 cents that I have to say to you guys, you look for value, guys. I'm giving you this for free, and this is the understanding, and I'm not advising anyone to trade. I'm saying watch what I'm seeing, and then try to do what I'm doing, and see if you cannot understand that in your way, and try to utilize that in a profitable way in your life. So guys, we had a sell side of the curve. We're not going to explain a lot here. And then after this sell side, on the sell side, we have original consolidation right here. The price went away from original consolidation. On the video, I explained that you can take this high right here and call all of this original consolidation, and then the price will go away from original consolidation and will come back to the original consolidation. So if you choose this as your original consolidation, or you choose, let me just do this. If you choose this or you choose this, you have a sweet spot right here. You see you have double tops right here. Look at the candle closes. So you can choose that part as your original consolidation. Then you move, price moved away. So in my case, my original consolidation is this one. Price moved away from here. So in your case, your original consolidation will be this one, and then price will give you the evidence to move away from original consolidation. Where? Right there. Easy as that. Even retail traders will be able to understand that. So if you want to understand everything that I'll be talking about right here, guys, I have a video where I talked about this, the first video about market maker model. So you will even understand this. When you come back to this video, you will understand what I'm talking about, and you will agree with me after you have understood what I taught. So moving away from original consolidation, whether you here or there, we have the same return to original consolidation. Then the market return to original consolidation, it doesn't just return on a daily, it return on this CB right here, sell side imbalance and buy side inefficiency. So this fair value gap that you see right here, let me explain the fair value gap. I hope I do not ruin this because I tried so hard to keep that way. So a fair value gap, guys, is the gap between three candles. That's how you explain it, or that's how ICT explains it. So let's say you have this down close candle right here. For argument's sake, okay, we'll have this down close, this other candle right here, and we have this candle right here. It doesn't matter the color of the candle, guys. We have candles going up. What the color is that? This one right here. So should I give the wicks? Let me not just, let me give the wicks, because this will make a better sense. So from this high going to this low, we have a black wick. Guys, to some of you who wish to illustrate such things, so this is the chance for you to see how do these people do the what? How do these people do the sorry guys to ruin your good analysis right here. I'm trying to select this thing, okay? Oh, I selected the vertical line instead of the trend line. You see what we call them, guys? This is a vertical line. It only allows you to go vertical, you see? So I like to use it because it keeps short. I like to use it for silver bullets. You see me annotating silver bullets like this. I highlight the 10:30, then I highlight the 10 a.m., then I highlight the 11 a.m. Within this, on a 5-minute time frame, I expect the fair value gap, and I whip. Closest hanging fruit. That's what ICT is teaching. So if you see a 2022 model on that place, it's even a bonus there. So guys, let me just do this. Don't worry, I'm not hiding anything from you that ICT is teaching. No, I'm trying to give you my understanding, guys. Forgive my candles right here, but I hope you see the wicks. Let me not put the wicks here. I hope you guys stress your mind, guys. Pause everything that you are doing if you don't understand what I'm doing right here. Let me change the color right there, and no, let me bring the color that is not here. I will delete all this, guys. I will delete all this. I'm just trying to explain to you. Let me move this right here. So guys, let's say you're going down, price is going down, and you want to sell. You sell when price comes back up. Remember, if you are retail, doesn't matter whether you are retail or what. If price comes down and I'm looking for sales, you are an idiot, guys. Whoever that is doing this, and don't take this as a disrespect, I'm saying this because I'm highlighting something that is making you not to understand everything that is being taught. If there's anyone at this point as who's watching this video, take this as a blessing. If you are the one who's doing that, you see price going down, going up, going down, you want to sell. You wait for price and you sell at this point. You are an idiot to do that if you don't know what you are doing. Leave this for people who knows what they are doing. You're supposed to sell here. you're supposed to sell here to go down here. This is a normal, ordinary structure that a retail trader can see. So, this take that everything. Let me just undo the delete. Okay. No, redo. Let me just use this to explain this to you guys. This move down, move up, move down is this move right here. Let me just extend this a little bit. This is even better. So move down, move up, move down. Suppose this is a higher time frame. You're supposed to sell at this point. I will explain that here. So now change the idea that you were using this as move up, move down, move up. We go into the lower time frame. When we go to the lower time frame, we see this right here. You want to see it here on this leg, on this leg, on this leg, on this leg, guys. Repeat this video, guys. I'm trying my best here, and give a thumb up for this one, and comment and share this, guys. Subscribe if you haven't subscribed. You see, I'm trying here, guys. I'm just trying. So if you want to sell, you sell here, you sell here, but you utilize these impulses. If you were not aware, whether you are retail or you are smart money, I'm saying to everyone, hey, come back here. If you wanted to sell, you utilize these highs to sell. Agree or disagree. But if you disagree, please close this video, move away from here, because you are not accommodated. We are going to confuse you. If you are selling, this right here and this right here should be your point to sell. So you catch the impulse. You cannot tell me that you want to sell and your ideal sell is this trade. Hey, I know there's a trade here. I will call this trade a scale in. This is not an original entry trade. My original entry trade will be this high or that high. Let's just agree to disagree when it comes to that. So this is part of these impulses that you see. So let's utilize this to sell. Let's put that pink thing right there. If I had a time, guys, I will explain this to you. But we are utilizing the live market. Remember, we have to comment on the market, and we have like a 30 minutes for the market for the after lunch. And then I will undertake another silver bullet as well as we get there. Hopefully, we will see it live before the market closes. So, guys, understand this. What you see here on these candles is what you see here. You wait for price. I hope I don't clutter this, guys. You wait for price to come back at this area, of which is this high, so that you can sell. What tells you now to sell? Now, catch this. Fair value gap. Let's move with fair value gap. I am not going to stress an order block to anyone right here. Fair value gap is enough for now. Because order block, it needs a higher understanding of what is happening. So I'm trying to give even the ones who are new to the market, I'm trying to give them the understanding so that they can join like a spare wheel. I don't have to go and polish them and do such and such. So guys, forgive me for taking time or explaining such on a live or a commentary video. So let's agree to this. You are selling here on this high, of which is this high, if you see it as what? As candlesticks. This is a line graph. If you choose your line graph right here, this is for those who do not know how to use a trading view. This is your line graph. This is the line graph I'm trying to draw here. So let's go back to candles. So you see this on a line graph is like this, but your line graph needs to be your visual mind. It needs to occur visually. You do not have to draw it like this. You do not have to show it. You just see the bars, the candles there, but your line graph should always occur visually behind the scene. This will needs to occur unconsciously. So how do you know? How does it occur unconsciously? Some people may ask this, guys. This is how it occurs unconsciously. You can go to my. I have a retail course for free on this YouTube, but my focus, guys, if you are following me, my focus won't be on retail. But I can assure you, you go to that retail course, you watch few videos, cause there I even give you more value that you don't get as you buy your courses out there. So you will see, you go there, you I have a structure where I teach a structure, where I teach a trend lines, where I teach everything, guys. You go there and you practice. You come to the market, you practice. You see, this is a higher high, higher low, higher high. Some people get caught out of this because it's me. I know this is a higher high, higher low, this is a higher high as well. Some people may say no, this is an impulse. That is external range liquidity. You are looking at the external range market. But my mind, because I did more lot of practice on this one, it even gives me this on a lower time frame as many candles. Because if we go to the lower time frame, this is like a downtrend. So I see that for me as an entry to move up. So this will be like, you have to buy here. Now utilize these candles. If you buy, you are a fool to buy here. You have to buy low, buy low. We have to sell high, sell high. So if it's me, I can buy. What I mean is that I can buy at this level myself because I have certain things that tells me to buy. It means that I can buy at this. I'm not a fool. I can buy at this, but I know in my mind this is the lowest probability trade. I'm reaching only for closest hanging fruit, of which is this right here. This is what I will be teaching you on the 2023 bus driver model, guys. So hang out onto that. Remember, I was explaining a fair value gap. What is a fair value gap? At that level, I would want the price to come into this high. I will look on that on these impulses. I will look for what? I will look for the gap, of which the first candle, the second candle, and the third candle. You see the low of the first candle and the high of the third candle. Between them, there's a gap, meaning price balances as it moves. You see, 1, 2, 3 candle. There's no gap between them. 1, 2, 1, 2, 3 candle. There's no gap between them. But here there's a gap. Like this one right here, there's a gap. But there's no gaps right here. This is what we like to look at. We call this a fair value gap. This is a fair value gap. This is where you want to see yourself selling, and then your stop loss, if you are more advanced, it will go here, but it should go at the high. At the high, if you sell here, your stop loss should be at this high. So this fair value gap, we call it a CB. Sometimes you'll see ICT call it a CB, or us calling it a CB. A CB means it's a sell fair value gap. You can call it like this: a busy buy fair value gap. CB, sell fair value gap. But CB stands for sell side imbalance, buy side inefficiency, meaning the sell side is imbalance. It didn't balance as the price is balancing. The sell side is not balancing. So the buy side is inefficient. So it means it will come back to this price and balance the price so that it will move low. So that's all. That's what I will explain to you guys. Let's close that, and we hope we go into. I hope you catch that, guys. Before we move forward, if you want to catch that again, pause the video where we are, repeat, try to rewind the video to where we started this discussion, and then so that you have the understanding and move on. I bet, guys, that will make you a better learner, because we are all here to learn. So that is the fair value gap, guys. This model, everything that you see right here has been explained. You will see as if like we are clutching the chart. We are not doing that, and we are not using this layout to trade. We have our clean layout right there where we see new things. You see sometimes where this is even, this one is even our explanation layout is not our trading layout, because you can see on Tuesday we were waiting on this, on Wednesday I mean to say, we were waiting on this one, and we took some certain some trades, of which I might show you around during this time, or I might not show you. I don't have to prove anything to you, since I said I have videos where I trade live, guys. I don't have to prove anything to you. You watch that, you take that, or you not. We're watching this sell side of the curve as I explained to my group. I might give that to you, the screenshots to you of the WhatsApp to show you that we talked about this before it occurred. And yesterday I could not trade because as I am a teacher myself, I was taking the kids to an excursion, to a farewell, grade 7 farewell. So I was watching the kids. I was enjoying time with the kids. I was spending time with the kids, of which it worth it. So we had a sell side of the curve. Then this where I was even showing one of our members who I'm trying to convert from retail to smart money. Where we were watching this, it was a falling wedge where I was conscientizing the members on the group how we are going to take this, as this was the sell side of the curve. We had the original consolidation right there, and as you can see, this is 15 minutes time frame, guys. Please look at this. This occurs on any time frame. You can utilize this if you're an intraday trader. You could have caught this. I missed the move. How do I feel about it? Not bad at all, because one of the members right there, who's the assistant mentor, got this. Well, we were on an excursion as well with him. He showed me from the bus that he caught it, and he's doing the challenge. Let me not talk loud about him. So this is not how I say I would trade it, guys. I don't want to go on to this. So you could have caught this when yesterday during lunch. You see, lunch, you are out. You got your TP. This is the reason why after lunch will run for certain liquidity. That is the rule. We want to see what I'm talking about. We want to see it here as we move on. Let me just leave this. So return to a original consolidation, and it went. What the 1, 2, 3, 4, 5, this highs is what I was explaining to. This highs, guys. This highs. Sometimes, please take a screenshot if you have to, but I advise you to do it yourself. Hence, I'm saying I focus on the current market. This is not far. If you catch this market on the 8th of December, I'm just 2 days behind, guys. You can do this by yourself on your own charts with your own favorite colors. So 1, 2, 3, 4, 5 highs, the ones that we were looking for, they are engineered buy side liquidity. So we knew that this is the sell side of the curve, this is a buy side. We knew that we were going to take out this, of course. It was during AM session. You see the fair value gap right here. You could, if it was me, this is how I could have traded this, but he traded the London session. I saw him trading the London session. I wish I had his permission so that, guys, I can show you his screenshot. He had this. He started from the London, somewhere from here. He got it from here. Let's see this. What is this? Yeah, he got it somewhere from here. I guess he got it from here. He's supposed to get it from here because he's part of us, guys. This is a must. He's supposed to get it here. We have an order block right here, fair value gap. Utilize this. See, the candles are respecting the fair value gap. I had another fair value gap that is in here. This is a mohawk, guys. I wouldn't say this is a violation of a fair value gap because this is a 4-hour fair value gap. Forgive me, guys. I'm not teaching that model. If you want to know a lot of what is happening on that model, you go to buy side market maker buy model, the first video of which I gave there, right there. Okay, guys. For hourly, it's on the hourly. We're talking about the second fair value gap. I want to show you. It's a daily. It can be. So it's a 15 minutes. Okay, this one right here. Guys, bear with me right here. I'm trying to search whatever is it that we talked about, but it's there. Okay, as you can see, on a 15 minutes time frame, it violated the fair value gap right here, but something else happened. If you were focused and you were with your buyers, you were holding your buyers as we shared this bias, guys. This one, guys, no lie, I will just have to show you maybe on the next video or on this video. We don't know on WhatsApp. We just go to WhatsApp videos, then I'll WhatsApp, and then I'll show you, or I will share the screenshots. whatever is it that I do, guys. But I don't have to prove anything to you. This was shared. This where the bar is to get the market. You could have maybe lost this, but why would you lose this? Because if we get into this, and I want to get into this, there was you would look for 3 keys right here if you are trading smart money. Yes, market maker model. You look for 3 keys to get your entry. So why would you lose? Why would you get it here? You're supposed to buy even here, guys. So this is the advanced part of it. So I missed this, but I'm not bad at it. But because on Wednesday I took the trade that I'm not proud of, guys. I still do mistakes. I took the trade that I'm not proud of, guys. Even today I tried to recover, but I couldn't recover that. But remember what ICT said. Whenever he loses, if he makes half of that amount, he goes out. Doesn't want to recover that trade. I will never recover that trade because I can never get yesterday. So yesterday has gone with yesterday. So during AM session, I was also late today from work, but I managed to get a macro from that. Just a single 40 ticks, I guess, or I don't know how to call it in handles, guys, but it's equivalent to around 40 pips. Yeah, around that, or 40 points, however you call it in on and as the cash Nasdaq there. So guys, let's see. I said you could have had something. We'll come into this right here. So the AM session, coming to the afternoon session, how you could have got this. Remember, you have a line right here. If we break this line, we shouldn't come back down below the line right here. So as easy as that. I explained it, didn't I? We have this, and then as we retest this becomes a real support, guys. And it's not just any line, guys. As you see, we have an equal highs right here. So it's a liquidity right here, as you see. So I guess I named this. Oh, I just drew the lines. Whatever, but this blue line is helping us, guys. Then after this highs, it break, it retested that highs. This is how you could have caught it, guys. No cap. This is what is happening. Okay, let me explain this before I go to FIP. Let me be fair to you guys. You see the first video I did after I traded NFP. The first video is NFP. The second one from NFP is my first video where I told you what to expect from the market. You go back to that video, guys, on the 2023 bus driver model. I explain everything. I give you the understanding of a daily. What will the market do on a day? What do you expect on a week? On the same day, when should you expect certain things to happen on the market, guys? I cannot emphasize this any further, guys. So what is it that we see? London, let's get out of London because I don't even trade London session. I am busy during that time. In South Africa, during London, it's around 9 a.m. to 10 a.m. So I'm at work, I'm busy at that time. So this is my catch right here. I have these lines as my high. We broke above. My buyer says buy. I have my signs right here. Maybe right here. I have smart money divergence right here. I have smart money reversal, market structure shift. Market structure shift. You have your market structure shift right there. Or better than that, guys. Excuse me, let me plug in the charger. Okay, guys. As I was saying, guys, if you were trading London, guys, this is London. There's no excuse, guys, on what we are sharing, guys. There's no excuse on what ICT have given out there, guys. Please, this is the best video I can ever make anytime soon from now, guys. I can feel myself today. If you were watching my videos, you can even tell when I narrate here, I am not in somehow disturbed. I'm saying this from the feeling. This can be the best video ever, guys, you can ever get. Look at this. This is what I explained from the bus driver model there, from the first video I'm explaining. But you are trading London session. What are you doing? What the heck are you doing here on the market? Why would you hurt yourself on this kind of a trade? You want to be on this market. What are you doing here, guys? There are certain times of the day when the market is doing this, and it does this each and every, if not every day of the time. What are you doing, guys? What are you hating yourself? Why don't you come into these things? Because this thing happened at certain time. What are you doing during this time on the market? So let me bring you here into London. Let's start from London right here. Guys, forgive me if this video doesn't have a direction, but I'm explaining what I see as we're moving to after lunch. I'm rushing to what is happening currently on the market. So we had this entry right here. Before I go to Fibonacci, it depends. What do you see? I see a breaker. I see the low, lower low market structure shift right here. I see the price coming into this order block right here. If I look at the low of that candle, let me move here. I see 15,802 and quarter. This one. 15,802, 803, I mean to say, and 3/4. I see this one right here. I see this one. 15,803. Below that. This, and see this. 415. This is your London session, guys. This is what is happening. This right here, this candle right here, what I've just explained to you guys. What are you doing during this time? Why don't you come in here? Because things are happening during this time. Okay, I was explaining something that is not here. I thought, forgive me guys, to explain this, to take the low to enter here. You could have entered right here. Let me show you your entry. Sorry for that. I thought this was a fair value gap when I was watching this. You can see this side, this, and this coming into that. But it's not a fair value gap. And if you rewind this video, maybe 10 minutes ago, I explained to you that there's something that I'm not going to teach you, of which I could have got this trade, not utilizing what I've explained, but seeing what I'm seeing. This is still the breaker right here. If you ask me, this right here, it's just that this is still advanced for now for me to explain. Let me even take one candle, not even two candles. Let me just take this one candle. I can even take the body of the candle. It doesn't matter. This is your breaker. This is the entry. You have the low, the lower low. You have market structure shift right here coming into it. If you missed it, I bet if I go to the lower time frame here, I can see the first stage accumulation right here. I hope I said this one. Okay, the going down is distribution. Yes, the first stage, is it accumulation or distribution? Whatever, the first stage accumulation right here. It went outside that. It came back into this 1, 2 candles that you see right here. We call them order block. But I'm not going to focus on order block. I mentioned that we are not going to deal with order blocks. It's more advanced. Let's focus on fair value gaps. Like right there. We call it right there. So right here you could have said, no, I don't want to take this thing we're talking about right here and say we got that. I just want to see the market breaking the high. It's still fine with it. You can see the market structure shift right here. This is even nicer. This gives us there, takes us back to where? This takes us back to Fibonacci. But before Fibonacci, I talked about something, guys. Please remember this. Let me take it higher. Let's see if your mind is working, if you are focusing, guys. Guys, this is the best thing that has ever happened to me. I hope this is the best thing that has ever happened to you. Me trading life like this, guys, I would be stuttering by now. Thanks to the development. You give the likes there, you share, you bring more people in so that we can break this thing and we break the fear, break the ice. What did I say to you guys? Oh, let me take it from this point right here. Let me take it from this point right here. let's not utilize, let's utilize the real thing so that you can understand what is going on. So we have the market doing the consolidation right here, and then we have suddenly we have a market structure shift. This would be cheating you guys, not giving you this. This would be cheating. Okay, let me just give it like this. It would be cheating. Forgive me guys if for those who understand what's going on right here, to those who do not, because we're trying to cover everyone right here. So this consolidation is this thing right here, this thing that you see right here, this thing covering right here, right? As you see this thing, you see the market doing this, where here, right? As it does this, I said in reverse, go back. In reverse, I said what? You cannot buy here. We buy here, we buy here. You cannot buy here. Consider this could pull back, guys. Consider our stop loss. That's important. So, what's happening? I'm dry, guys. Yo. Excuse me, guys. What's happening right here is this thing. I said to you, you look at your setups on these legs right here. As it comes back, you take advantage of your setup. Let's go back to that. Let's remove everything here. As this consolidation occurs, moving away from the consolidation, moving away, you see this willingness. It's tapping you, telling you that, hey man, we are moving up. So what do you look at? Fair value gap. I explained what is a fair value gap to you. Do you see any gap here? Nope. Any gap here? Nope. Any gap here? Nope. Any gap here? Yes. This is the only time that you see the fair value gap. I hope, guys, this drawings doesn't clutter you, please. This higher time frame drawings. Oh, it's not even higher time frame. This 15 minutes time frame. Let me do something that we don't have here. Look at this high, this low. This is a fair value gap. It's a busy buy side imbalance, sell side inefficiency. So what do you see from this fair value gap? You could have been offside a little bit, guys. You could have been offside a little bit, but you would have suffered. And is this Tuesday? Yes, this is Tuesday. It was London. I cannot. Let's see this. Sometimes this thing does this. Let's see. I think I took this trade. Or I took the. Okay. I guess it disappears with time. It can only occur on today. I hope that it will occur for today. When we go as for today, let's go back. Okay. Let's go back. I don't know with guys. Oh no, I am not connected. This might be the reason. Oh, I needed to do. I'm connected here with thread of 8 here, so that I cannot connect with it on the other side. If you are using Top Step, you know what I'm saying. So guys, this is what is happening here. As this happens, it's an impulse pullback. Tell me that you don't see this. If you do practice, you can see this is happening. Pullback here, impulse. Maybe pullback or consolidations are sort of, but you see what is happening right here. You should be able to visualize this, guys, by now. You should be able to visualize what is happening like this. So as it pulls back, we said on a pullback, how do you know where it's going to pull back? Let me fix this. We've put a pullback here because this is the only place you've seen what. You anticipate where the price should turn. You have your biases here, guys. What else do you want? This, I said to you, it has been shared prior as prices was around here. This sell was also taken, guys. This is the time, I guess, on Wednesday, I guess, when I said I took a bad trade here. Because my bias, I was looking on this 1 hour. I still remember. I can take you there, guys. Let's look at this. I was looking at this fair value gap while my buyers were sells. Where's the current price? Oh, we're on a different thing. in queue. Where's that? Okay, let's go strictly to 1 hour here. Sorry guys to waste your time, guys. I feel emotionally on this thing, guys. Oh, it was 15 minutes. Why? What are we doing here? I was even attacked. It was not. It was 5 minutes. I remember on a group. I have to share the screenshots with you guys to show you how what was the inside, because we talk a lot as the price is doing this. I'm not entertaining them even now because of you guys. As you can see, I was watching the price at least to come for this fair value gap because of what? And it was PM session. Because of what? Because look at this sweet spot right here to come into this, but it doesn't have to do that. I've seen it when it was late as it was leaving. This is original consolidation. Price left the original consolidation. You can see that. That is not, guys, that is not a surprise, guys. Look at this smooth edge. Agree to this as we talked about it on the video that I told you about. The video that I made on smart money buy model. Sorry guys to repeat these things. I feel offside now. This is original consolidation. Price left original consolidation. This is a smooth edge. This is where it starts. Look at the low. Utilizing the body. If you utilize the body, please, if you utilize the body as original consolidation, like me, as you see me choking it, you must keep something in mind. You need to keep something in mind that sometimes it doesn't have to return to original consolidation as ICT outlined there, but the original consolidation should make sense, should be this one as it returns to original consolidation. Let's see the high right here, of which is 43 and 3/4, and seeing the high right here, of which is 44 and half. If you can see the touch into this fair value gap, this is the fair value gap. Let's search the fair value, other fair value gaps. You have this fair value gap right here and this fair value gap right here. The return, what is the chance? If you can wait for this, you will miss this. You can utilize the half risk, take half risk on this one as it can leave. Remember, it doesn't have to return to the fair value gap, because sometimes we are caught up on this one. This is a trap. I can see clearly because there's a low here, but look at this, and then plus we have a fair value gap. We would want price to come here, but later in future, I guess let's draw the line. Let's draw the line right here. Let's not talk much. Let's just, I hope I delete this. Later in future, it reacted. You see that fair value gap? Do you see that fair value gap? Acted with on that fair value gap invasion during NFP today. That was your NFP. We're moving, guys. I am not teaching, guys. I'll explain everything that I'm explaining. It's happening there, guys. You go there and you see what is happening. So during NFP, you got this manipulation during NFP, but you got the test of that fair value gap. That was important, guys. Let's put this. Or as we move forward, let me put this as golden line. Forgive the cluttering, guys, as we're going to explain the NFP today and everything else. So as it, I was explaining this one right here. So the fair value gap, the tap into the fair value gap entry, stop loss above. I told you if you advance, but you can even wait for the, where's that fair value gap? This was this one, eh? You can even put it here, and it depends, guys. Or you can put it, but if you are advanced, you know that for a fact market doesn't have to touch the 50% of this fair value gap. That's where your stop loss goes. This is where you get your micros. That's how I missed it. Like when it came even this time, like I don't want to swear, but I effed up my account there. That's what I did. As I bought. Why? I played smart, seeing maybe it was this year's on a lower time frame. I played smart and buying, I guess, on a lower time frame. And from the group, I was telling them that I'm watching only the 5 minutes. I was supposed to watch this because I bought this thinking that I will target this as time. Look at the time. But anyways, I learned something. I learned to stay aside as your main setup is not playing at the time, because this was advanced, was more advanced, because this was late, as you can see. And then I mentioned that, say, you can leave the sell side of the curve and wait for the buy side of the curve, because that one is easier. As you can see, myself, who talked about the market maker model, I even failed on this sell side of the curve. Avoid it, guys. If you're starting, wait for price, annotate it, it's fine, but wait for price to come to the buy side, because that one is easy. You will see as we move back up. So as it came, it consolidated. Remember what ICT said. As price come into your PD array, you expect a consolidation. Why not expecting this, guys? So to me, it was supposed to play. So it's hard, guys. Like, you wait for tomorrow. And I remember I applaud Mudu. Mudu, when it was here, he called it a day. He said he will see it tomorrow. I have to show you the screenshots, guys. I have to show you the screenshots where he said everything else, he will get this tomorrow, and he got it tomorrow morning. That's when he was trading this, and he got this, and this was amazing. Like I said, he was trading this on a bus. It was during London session, and it that thing brought his account to some levels, certain levels. So guys, now you wait for consolidation. So you could have got your trade here. Let's talk about it. You target this, but this was a macro. So let it go. If you couldn't get it here, you are just chasing price. So let it go. So you wait for tomorrow. This is the whole night. What are you doing during this time? You are sleeping. That is the whole night. Asian session. Guys, tell me if you want to trade the Asian session. This is your Asian session. Come and trade your Asian session. It's fine. Not that there are no setups, but see what is happening. See during the sessions. See during the other Asian sessions. You see the London. Come into the New York. Make your choice. You can work hard or you can work smart. You can work hard or you can work smart, or you can work harder. So the choice is yours. So let's go to the now we are even back after lunch. So coming to the London session. So you had a displacement, you need to buy here, and we were on a 15-minute time frame. You had to buy here. Stop loss low. I told you about the candle below the fair value gap. It could have taken you out, but stop loss below or below the mean threshold of this order block right here, the one that you have right here. So you could have caught your trade. Everything else could have worked smoothly. So you could have caught this, but no worries, we can get another one. This happens on any time frame, as long as you think like this. So it went into the TP. So now, how do you think about this? If you wanted to enter here, you ask me how you utilize this. I've shown you that. So during London, during AM session, look at this. You are still buying. During AM session, you have this. You have this fair value gap right here. You have this fair value gap, which we didn't come for. You have, okay, let me delete this. Let's in the chart. You have this right here, this low to that high. You have your OTE, nothing but your OTE setup. Just call it that way. You entered on your journal. You don't have to say, I saw the low, the candle closed below, and the other trend line crossed. What? No. You entered on your OTE. Remember, you wrote that thing as your part of the setup. You wrote the rules. What are your rules of OTE? My rules of OTE is that I got onto the fair value gap that I see on 62% fair value gap. You got onto that stop loss according to your rules. And here, where's your stop loss? It should not go below this right here. As it went above this. So somewhere here, this could have made a nice stop loss, I guess, below the fair value gap, the second fair value gap, as giving the room. But even if you could have given the order block as well, right here, it could have been a nice stop loss, I guess. Nice trade, guys. Like, nice trade. This is what I'm looking for. So you could have got that one AM session right here, as you have. After 9:30, 9:30 is your Judah swing. You have it right here. Here's your Judah swing. And guys, this will help you a lot, guys. You either take it or leave it, but this will help you a lot. To some of you, this will open your eye. During 9:30, it's opposite move. Give it few minutes. Then it puts a stamp to your bias if you're going to the opposite direction of a 9:30. If 9:30 is going down, you are going up. If 9:30 goes up, you go down. There's this guy in our country who's trading this. This is part of the thing. I guess I've even shared this on YouTube channel, on this very same YouTube channel. We call this a Judas swing. Guys, if you have that adrenaline rush, you can take this, and I will show you the better way to see it. Guys, I'm so like, I'm laughing now at the things that I used to see, guys. Like, I am laughing. I am really laughing at the things that I used to do or I used to see. Trust me. Because now I'm even trying to explain you something on this, but because of market maker module, it's telling me to say, no, explain the real thing, what is happening. So, but by the way, let's forget it. Let's explain what happened here. How you could have seen it using the same thing that you've studied on that video. That video is a course on its own. That's how the market is moving. You just get into this part, this market maker model series. It's a course on its own, guys. It's big. Let me show you this. Let's try to see this. I want all of us to be honest. You could have utilized, at first, this is your displacement. You could have utilized, either you take it here to this low, or you take this one to this, or you take this one. But I would advise you, I would ask you one thing. Where is your market structure shift? If you are using your AM, your market structure shift is somewhere. Where exactly? It could have been here, the return. So if this is your market structure shift, you utilize that leg before the displacement, the whole thing being the displacement. We can even utilize this, guys, but please follow. The price didn't present itself, okay. Let's go to the higher time frame and get the right thing. Sorry for that. We can do this. You can take this as your market structure shift. You can take this as your market structure shift, however, as long as you have the understanding of it. Some people are waiting for this as their market structure shift, looking at this one right here, of which it was Thursday. Okay. If this is your market structure shift, if you're looking, but we were looking at the AM on Wednesday. Sorry. It's 1 hour. What is happening right here? Something is wrong here. Okay, you take your favorite gap, you take your Fibonacci from this high to this low. I wanted to take this. I wanted to show you the reverse after this. It's this one right here. It's this one. It's Thursday, Wednesday. Yes. It's this one right here. You take your market structure shift. If this point is your market structure shift, you come to the low. You do the other way around. Sorry for that. From the low to the point, you call it your market structure shift. You see this point called a market structure shift? What do you know? What do you know? You would know the reversal. Where's that reversal? The Thursday reversal. This one right here. Yes, guys. Let's take this to our ideal time frame. Sorry, guys. I hope let's get everyone on track who's lost here. Guys, I'm rushing. I'm seeing the price doing something right here. So I would wait for 130 at least. You see, you must buy here, not here. So I want to hold into that. Rather, I'll be forced to use the advanced one. And when I lose in front of you, it will be like, he's saying this, then he's doing that. So guys, for those who are lost, we took this thing from here to here, from here low to high. Basically what I did to this, guys, I did this. If you had this, and let's say this, it's something like this. This you call a market structure shift right here. So I'm taking this leg that caused the market structure shift, not the displacement, not the elephant in the room. I'm taking that leg, of which is this leg, not the displacement, because this is the displacement. This is an entry again. This is an OTE entry, guys. I bet today's entry, eight. This was a NFP. You can see even the news, they are even playing the setups. We'll come and revisit this. As we have an order block, the touch right there, then it went back up. So let's forget that and focus. You take it from the low to the high, then it will give you a standard deviation. Where does the price has to turn? You wait. -1, -1.5. This is where you see -1.5 turning like this. This is where you see -1 giving you the low. So we utilize this idea. Everything is given to you in the market maker series, guys. Let's go to 15 minutes and utilize that thing, because we have the notes there that suggest that way. Nope. Give us back our Fibonacci. We want our Fibonacci back onto the minutes, please. Let's go back to our ideal time frame. So we agree that we take this as our market structure shift. This point right here, as you see, it even went even here. 9:30 right there, 9:45 as it went up. 9:30 went down, 9:45 it went up. This could have been an entry on its own. Let me explain. For me to bring the Fibonacci to you guys, I was explaining what? I was explaining the -1 standard deviation. It will turn. So during 9:30, as you can see, you sell, shoop. You can trade this, guys, every day. There's a person I know in South Africa who's trading this, who's famous doing this. Even maybe today, if you can check, you got it, that sell. But that's a Judah swing. It's a trade. There are other things. I teach Judah swing, guys. There's a video on Judah swing. You go for the Judah swing, you go to your midnight open, you go to everything else, you'll get them here. But if you have this thing, you have the umbrella of everything. Because I explained the OTE here. You had it. Somebody comes with you with the SMC, any SMC entry right here. You have it. You can then utilize it to get your entry to go even further back. Sorry, guys, just a moment. So, guys, you can, like, if you have this, you have it. You have everything. Not everything, not your holy grail. You must have your discipline, your psychology right, but you have everything to utilize to read price. So this sell, coming back to test this original consolidation, going back up. This is how I could have called it OTE, utilizing this, because I was not enough. As you can see here, but this right here, another way to get this sell right here, you have a fair value gap. You can agree into it. After having a fair value gap, you could have chanced that one, got it, but it's due to swing. If you have an understanding, you could have got that one. But it was going to, if you were trading a normal trading setups, this was going to take you away because you thought that it will come here and go back here. But forgetting that it have reached the point where you want it to go up. Focus on up moves. Forget about down moves. You want to see these things being disrespected. These fair value gaps. Second hand. This is where I shine when it comes to second hands. This is where I hate. I love second hands being disrespected. I hate them when they are respected because they throw me out. This is a second hand. If you can see from this high to this low, second hand, it worked here. So it's a second hand for me. So I like to see it being disrespected. Then it comes back to it. We call it an invasion fair value gap. Up. Certain things, guys, like they will make sense for you. Then we have this entry right here, AM session. I was watching this, guys. I was really watching this. This is what gives me a little. Let's see if we can. This is today. No, it's not today. It seems like today. Sorry, guys. I thought I was going to give you this. I was not here. Then the AM session. They are like, guys. There was this order block right here. I guess. Um, what happened? You have a fair value gap right here. You have a fair value gap. Oh, you have this one which is respected. What time is it? This is 11. You see? You have this one. You have price coming into it, respecting it. But you had the order block right here. You can take the 50% of the order block. I like to use the body. You can use the wicks, but I like to use the body like here. You see, I was off out. But that would be below this, would be my stop loss. You can use even the wicks like right here. You would be even more further out. So I would want to see to absorb. For me, I would want to absorb the drawdowns up to this point. Coming below this, for me, it was failed setup. You saw me trading live, guys. This is the kind of a trade I like to see when I come in. When I saw trading spending times into a PDRA, I don't like that, guys. I like when I enter trade, either go to my stop loss or go to profit. I don't like this, guys. This would be lunch, I guess, maybe. Yes, it should be lunch, this thing. Because I don't like this. I like the speed when I come in. Come in, show me that my setups works. Don't show me that my setups work so that I can learn from that trade. Let's call it a day. Forget about it. So negative, we have negative 150 as price came back into that. Let's remove this. So we come to today. Guys, I explained that who wants to trade here. If it's you, come harder. We don't want to be on a market. See what I'm talking about, guys. If you don't see what I'm talking about if you don't see what I'm talking about, guys, as a guide, I don't know how to help you. You need to go to certain river and wash yourself up. See, watch the time. Look at the time here. After PM session, look what is happening before London. This is lunch. This is PM session. After PM session, look at what is happening before London. Guys, this is written here. If you don't see this, I don't know, guys. So what happened today? The London. Guys, I'm starting to annotate the trade like you now. I'm starting to be in track with the trade. I want to see what is happening. I'm starting to be in track with the trade. What is happening right here now? I could have caught the NFP because the NFP made the most. I don't want to lie. NFP made the most. This is the move I would have want to be in and moving up. So this is the kind of a move. So let's see what is happening during London. What happened during London? During London, we have this highs, this Asian highs. This is still a setup. Let's prove you wrong, guys. Let us prove everyone wrong. This is Asian highs. Should we take the candles? This is Asian highs. You can see this is London. This is your draw on liquidity, relative equal highs. So you have your draw on liquidity that you are going after. Then it means that you've taken the Asian low. Look at this. Price is doing this each and every day. I told you about this after price close here. Let's see. After price close. Let's see what price did. You can have a simple trade just like this. If you don't see this, don't trade. But you can have a simple trade like this. If you can go to they will call it a QM. Guys, it doesn't matter. Read price for what price is giving you. We have this consolidation. Then we have this London 3 AM. So this you would buy after taking out the liquidity. And you are not just buying. You are buying the order block. You are buying the fair value gap. You remember I said to you, we utilize the impulse to get our confirmations, but we don't enter as it goes above. We want it to turn low. So this is the low. This applies to your rules, guys. I hope even if you don't get a trade here, this meant a lot to you. So let's read price. Let's just try to read price. Even if it didn't go your way, but it went your way, guys. Let's try to read price. You have this, you have that. This is what you could have seen. You have this high. Do you have this low? Should I call this consolidations? Should I talk about this consolidations? Should I talk about this low? Should I talk about this high. This is the end. Let me make this thing red. Let me make this thing red. Guys, if you cannot see from now, there's no any other way I believe I can help you. This is high. This is high, high, higher, low, higher, high, higher, low. Let's call them higher highs and higher low. It's fine. Let's accommodate everyone for now. So this is where you get your buys, right? But if you're more advanced and you call this one impulse, like shoot. So it means you are capable to call this thing one move down. Then you can get one move up. This is how you can see price. I told you about these visual lines. They should happen unconsciously to you. So if you see this, you buy here, you wanna buy here. Does it make sense? Yes, it makes sense. So let's delete this thing. Start to read price now. First thing first, I would want to see this. I would revisit this first. It did not check out. It's still fine. I know price will still come for this. So 1 point scratched. But I could have utilized this because I shouldn't have did I utilize the internal? Because I see myself utilizing the external here. And I see the wrong way of marking the Fibonacci right now. But I'm still forcing it, yes. So I marked this. I should have marked this because we call it this high, high, higher, low. Take it from higher low to high, high. We want a next higher low. You can see 50% right here was touched with fair value gap. This was it. This is a confirmation. Or the block, confirmation. The time of the trade, confirmation. What else do you want, guys? This is the easiest way to do it. What else do you want? Where's your TP? The highs, closest hanging fruit. You'd be surprised how much this is. You will be surprised. So as you see this for me, it's a lot. I don't want to lie, guys. This for me, it's a lot to digest. I'm trading inside the consolidation, but this is a lot. I would utilize this from here. From this, you see this move up. I would want to see this, something giving me an entry here. I guess I'm not audible enough. Now I'm thinking of talking to myself. Or I think that you are next to me. This is 15 minutes. Everything checked out. I would go, then I would have a confidence to go to lower time frame. And as you go to your lower time frames, do this, because I guess every trader is doing this mistake. Do not look for any sales. If you see any sell setup, this, whether it's smart money or retail, disregard that thing to be violated. If it works, forget about that trade because you came in with your bias. So we're going to go to our lower time frame. Guys, it's just now I'm just seeing the charts. So it's the reason why I might be slow or doing other things. You see what I'm marking? I don't even know. You see what I'm marking? I am marking this area right here. As I'm marking this area 1:30, 2 minutes left. As I'm marking this area right here, on this impulse, I want to buy it lower. Where low? Somewhere lower here. I don't want to buy it here. I'm marking this, so I'm hunting the buys. Everything sell, I consider that thing to be violated, not to be respected. That's the mindset I'm going to have. Then I'm going to look at my models. Then I'm going to look at anything that you trade. If you are a retail trader, you are utilizing time. And at this point, you are in a trade. This is why sometimes you see your things works. This is what is happening. The thing about retail trading, guys, and I'm not marking on anyone. This is a falling wedge. I taught this myself on this YouTube channel. I taught this. I'm teaching this. Years ago, I was teaching this. So this is the reason why I was able to catch my trades. And this was going to be my TP. Guys, like before I even met ICT, I don't know. I was close to him. I was going to read the market my own way. Because I was 5'2". I was back testing the 930. The thing that I've shown you about the 930, I was busy back testing 930. I had a smart money concept, but I was believing in 930. I wanted to see certain things in 930. I was watching the trend lines. If it was opening above, I wanted to go low. If it was opening low, I wanted to go above. Now that I understand what is happening, I know I was close. It was just like that. Then it comes to me as with this say that says, whenever the student is ready, the teacher appears. Mind you, I have an internet, I have everything. I was watching YouTube. I had more years watching YouTube, watching Forex. I never met ICT. I was disregarding that. And by then, ICT was there. You can just imagine what was happening. But I had to be ready to accept this kind of a knowledge. This knowledge I have, guys, back in my mind, but I'm no longer using it. There is because I see price better than this way. This is how I was seeing it as a retail trader, and this is how I was winning because I was using this. I was also using a structure into my advantage as a confluence. So I wanted to see, as you see, the lower lows, lower highs, lower lows. I wanted to see break of structure and then the retest. This is structure 3.0. I was also utilizing this as an entry as well. So, but I didn't see the fair value gaps, guys. I didn't see these things. These order blocks, I didn't see them. I was just seeing the shapes that I was able to draw. Utilizing those shapes that I was able to draw, enter. That was a religious trading. I find it hard to believe because my trading faith, let me put it that way, or my setup was holding on the line that I just drew. Why did I draw that line? Somebody told me that it was a falling wedge. So it's a wedge, it's a pattern, it happens. Yes, it happens for real. Here's happening. But if you didn't have my style, this was this was my TP1 from the start of that wedge as it falls. This was my TP1 and I was going out with TP1s. So this is how the retail traders caught it. This is how you might have caught it, and then or head and shoulder. Or you could have caught head and shoulder. You saw break line, you see the left, the head, the right, then the break coming back and retest. This is how you catch it. But I'm just showing you the way. You don't have to look at the pattern anymore. See the way, see the light, see everything as it goes. So guys, let's focus here so that we can rush. We can be able to rush to today's trading now, the current trading. So today's London, we had this. We had the market structure shift. Choose any. I choose this. Okay, it's market structure shift. Come back to it. Choose any fair value gap that you see here. I only say this. Take the fair value gap. You want to take the risky stop loss? You learned your lesson. Take the stop loss. Move forward. You are backtesting. What I'm doing with you guys, I'm backtesting these things. I'm showing you that these things works. But now see me what I'm doing. I'm telling you about the models. But this is not about the models. This is about market maker model itself. You find these models that you see, that you utilize. For me, they are fractals. They are part of the main thing. But if you know the main thing, see the main thing. Go to your, I don't care whether you trade smart money or you trade retail. See this. I've shown you your head and shoulder right here. Why it had to happen during a certain time. Change that. Stop trading when the market when there's no volume in the market. Still see your head and shoulders. See how they work. See, backtest them. Your trading style. Wait, stop it. Just backtest the times when it occurs the best, the most. See those impulse. When is that time? Start to trade during that time. That's all I'm saying to you. So this is how I could have caught going to lower time frame. Even 5 minutes is even enough. Let's play the silver bullet. Remember I told you about the vertical lines. Maybe this is the time we put them in place. From 2 a.m. to 3 a.m. Where's the 3? 3. Right here. You look at the fair value gap. So this was off, but it's part of it. You're still having a London. This is before 5. And then between this 2 a.m. and 3 a.m., let me show you your trade. You only take that trade. You can utilize that trade. This is the advanced way to take your trade. You can draw this line every day. Look for a fair value gap that occurs during this time. Utilize that fair value gap. I told you also that this for me, it's enough for a fair value gap to be a TP. Utilize that every day. See if it doesn't happen every day during this time. This is the fair value gap. You see, the only fair value gap at that time. This is the only fair value gap at this time when you open the market. This is the second one, by the way. This helps you to scale in, hoping to get this low, and you got it. Next fair value gap, nah, market is consolidation. Market is even moving away. It's telling you to leave, bruh. You said I would take this low, and you only took this trade because of this lows. Leave me alone, bruh. Like I just took the lows. You take this like this, come back. I hope guys you are enjoying yourselves, because I'm enjoying myself. I even forgot. No, we're not going high, we're going low, bro. Come on. You see the fair value gap right here? You're supposed to see the fair value gap, the high. You can choose the risk trade above this candle or above the high. That's your choice. Then you can take 1:1 point something or hold. I don't know to where, but if you have an entry somewhere back there, you could have utilized that. Then you could have hold 1:2. Look, it even moved 1:3. That could have been a trade, and stay away. But this is what I like to say. During the time of trading, market will try to give you 2 to 3 entries, chances to enter the market. So you still said you come in during, utilize that 1 to 2 hours, sit on the market. Market will give you an opportunity. If it doesn't, it's not your day. During those things, you can even do it without bias. Just to sit, wait for value gap, enter during that. After that, take the low, take the high, close the hanging fruit, close your trade, go back. Come tomorrow, do the same, close, go back. I'll try to show you the one. It's not 2 to 3. Sorry, I am wrong. But this entry, as you see, 2 to 3 is afternoon. Please forgive me on that one. This is 3 to 4 because it's AM. Sorry, I just misspoke that one, and it makes a whole lot of sense. But also this one, you can see during the time, you can see how the market is pricing. And this is one of 2 or 3 trades that I'm telling you before the trade. So you utilize this one. This is the only fair value gap again. After this, you know with your buyers that you took out the sell side liquidity. Guys, forgive me, I just saw this price. I didn't prepare for you. If I prepared for you, I would have shown you the slideshows, but I would have told you could have seen the markings. So I'm just doing the markings as we move on. Please give me credit for that one instead of criticizing. Plus, I'm in good energy, so let's talk about it. And if you are smart enough, you can tell that this is natural. This doesn't come in preparation. Only if you are smart enough, but you can pay mentors a money to show you something that is less than this. Something that is way far useless than this. So you can do that. You can either choose to do that, or you can give me your time. So for me, guys, let's be clear. Here you look at your smart money reversal, everything. I don't want to talk about such things. I just talk about the model. You see the low, lower, low market structure shift. This is your breaker. Whatsoever you use, even you can utilize this low, lower, low, the breaker market structure shift. However you read, when you are at the right place at the right time, it doesn't matter. That's how I take it. You could see this as your market structure shift. This as your market structure shift. This as your market structure shift with candles, of course. This is your market structure shift. But this is the only fair value gap during this time. So I guess this was beautiful during London. Give it up for that. London high. You took the Asian lows. You're going to take the Asian highs, because Asian, that's what it does. And guys, please check if it's right or wrong. You will see something. Asian is the one that creates original consolidations in most cases. So try to see this kind of a setup. After taking the sell side liquidity, look for your model to lower time frame. As easy as that. I got it on 5 minutes. I saw this on 15, but I got this on 5 minutes. I disregard anything that goes low except this advanced one, because this might not even be enough. But trust me, be careful. Let me not even advise this, but be careful. This candle, after this, market could move even straight up, shoot up, you wouldn't have blamed it. You didn't know what would happen here. So you would watch a model, you could have seen your model on lower time frame, but market move. So after this one, this first opportunity, the second opportunity, then on a real time to trade, you get this. So this is silver bullet London session. You get this turn into this fair value gap. You see this breaker right here. If you can utilize this order block, this breaker, and you see it being respected, you can see right here the body is being respected, the wicks, but the whole of this order block as a breaker is being respected, and it's at the fair value gap. So everything is aligning. Bus driver model, this is your entry to get into your bus. This is a beautiful bus stop to get into your bus. This is a promising bus. What if I lose this? See what you did wrong. It's still fine. It's part of this. It's part of the game. Maybe you could have focused on this, wanted to go even further low and lose it. But you come back, you get experience. So where's your stop loss? You put it riskier. I wouldn't even lie to you guys. You put it on riskier, or you can take this low. You wait for this. You can take this one right here, because this is 1, 2, 3. You can put it here or put it there. This is where you put your stop loss. And where's your TP? This could have been your TP, the high, or you could have got an excuse why the price is even moving higher. Then this line right here, is this line the line that we drew? I don't know, but seemingly, yeah, it looks like the one that we drew there. I know that one is gold. So seemingly this was the highs on the higher time frame. So after taking those highs, where do you want the price to go? There's no any fair value gap right here. I wouldn't have utilized this. Let me go to hourly and see if I could have got my TP. On the hourly, I did not have even anything right there. So I would have taken the internal range. Don't expect the external with. Guys, please don't expect this with this kind of a moves. Wait for the main setup on a higher time frame to expect taking the high, the external liquidity. So it means that we had on the consolidation. We agreed this is a consolidation trade, but we are focusing only on what is happening from here. We agree that this is consolidation. Because you agree this is a consolidation, closest hanging fruits are your best trades. So you can see this high right here. You would go for this. This went for it. So I don't know why you would go. This line represent this one when it was taken. So we'll go to the lower time frame. That doesn't matter for us. Guys, I'm trying to bring quality to you. I don't know how you would value this, but I'm trying to show you what we'll be doing. I'll be happy if most of you try to see the value. So this high would be your TP, unless if ever utilizing this order block and this fair value gap as a second hand. But you know me and the second hands. This fair value gap is above, you see. But you know me and second hands. So I have a fair value gap that is going to warn me. There's nothing. I'm not going to pick something just because it's there. Then you have invasion fair value gap. So it's your choice. You have invasion fair value gap right there. You have invasion fair value gap above right there. Where does it start? Here. You have invasion fair value gap of which price went into it. And then when it does this, I could have hold, but I don't know. So expecting it to go high, you see. But keeping in mind that I'm trading what? Keeping in mind that I'm trading a consolidation, I need to set up my mindset right. I'm not going to expect the high rate trades. I'm just expecting the close hanging fruit trades. Then that will be it. So after taking this high, I could have stretched my trade at least to go at this point, at this level. 1:2, still 1:2. Then if you are more riskier than like me, you would have gone even below 50 consequent encouragement. There you could have got your 1:5. But remember, this won't happen every day. Price can go into this order block. Price can touch this. What is this? Allow me to remove this. Allow me to delete even this one, because somebody will catch the video later here and talk about that. So what you see, that was your entry, that was a TP, you called it a day. If you're more riskier, you would have been rewarded, but in most cases your stop loss will be hit. So it's fine to play this or to play this right here, because this, when you have more strikes than the one who plays this has more returns, this one has more returns. I said below 50%, I like to do that, more returns than this on a single trade. But when it comes to strikes, this one lose more than this one. So you ask yourself, what is it that you want? This one wins more, because this drawdowns, this one can handle them up to this consequent encouragement. So automatically, but if it hits the low, you both lose. But if it hits the consequent encouragement, makes sense, guys. If it hits the consequent encouragement, this one is still in, but you are out because your stop loss is here. So the sun says this one will do more. So you rather, my advice on a paper trade though, my advice, you rather take this than that one. This makes a lot of sense for me. So it went during London. Then let's see the Judah swing. Right 5, before 5, you look at the highs. Guys, this was TP, this, and then the second one was re-entry. So this, like, if you understand what's going on, we take out the high. Should we go for midnight open? Yes, let's go for midnight open. You see the midnight open, you'll have the midnight open here. I sense that the midnight open should be here. Then we took the low, then we took the high of the midnight open. As we come back, I will go further to the lower time frame and see the entry here. Entry of sell. It's midnight open. Come on. Then it's a Judah swing. Since it's a Judah swing, I would want, it's the one before 8:30, 9:30, I mean to say. Then I would expect my TP wherever that I expected. This was the reason for a sale. Guys, I'm trying to give you the reasons. Just try to believe it or not. I'm just trying to give you the way the price moves. Then after that, we were going for NFP, right? We were going for NFP. So on NFP, this is what we were doing. When we go for NFP, it went lower. We explained this low. So shall we go to the lower time frame and explain the entry here after NFP? These are the kind of entries that you like to see me doing. If NFP goes low, I like to go high. You see me doing that. I know some fools will tell you that they will see with the open putting the buys before 3 minutes before the open. 3 minutes before the open, you had the liquidity. Wait. Let the direction establish. Let those people be taken out. And let us trade in peace. Is there a peace here? There's no peace here. Your adrenaline rush is high. There's peace here. There's peace and harmony in this trade. So let's explain this trade. Can we get our entry on 5 minutes, or shall we go to the lower time frame? So let me explain the NFP entry. But the real entry is this one. You see, after 9:30, if you didn't get this one, you come for this one. This is the real time to trade, and I will show you. This is the silver bullet from 10 a.m. Put your line from 10 a.m. to 11 a.m. We were watching this playing out, guys. We are not far. We started off around here, I guess, and we were targeting this. We talked about it before it even happened. So it's fine. I appreciate, guys. I got one trade. It's enough. But I appreciate the value that I brought here. But if we see something, but even if you don't take a trade, or it takes a long, this might stretch for a long, but it's even fine. I appreciate everything that I got. From 10 to 11, you look at this, guys. I appreciate this more than you. You don't know, guys. I appreciate what I did more than you, because I did not have time. So the little time that I have doing this, I appreciate that I could even give you something to go with. So we have this fair value gap right here. We talked about the fair. This ones you don't know. Where are you going? You are going above. Do you trust your buyers? Yes, you trust your buyers. Right. Let's go. Let's remind ourselves where we're going with the higher time frame expectations. Oh, we just done here. Okay, we go for this ones. We just went for this ones. We're not even convinced. If we go for this ones, we have a fair value gap right here. This will be the micro dot. If I say if I enter a trade, this will be the draw on liquidity. So if I do anything beyond that, guys, see, that means, please watch me. If I see I do anything beyond coming here, know that, guys, I am, what is this? Know that I am offside, and you are the audience because I am live now. Remember, I have to maintain my emotions, and I also have to talk about price. So if I do anything not coming here, this will be my TP. If I do anything not coming here, guys, this is my drawn liquidity. Know that I'm offside, and it's the lesson now to learn where I did to go wrong, and then make sure that you don't do that mistake again. So I could have caught the entry right here during lunch to run to this liquidity, but it was just lunch, hoping after lunch it gave me the second entry to enter and go for it. We're going to watch that, but remember we are talking about the NFP. So I just wanted to see where we are going. So we talked about an NFP. If they trade down, you wait, you go up. Let's go to the lower time frame and see what we're talking about. Where was the NFP? This is the NFP, guys. You see, if you are trading NFP and I want to go high, and if price touches here, I know it is going high. So I don't even have to wait for this market structure shift. Immediately I got this market structure shift right here below the order block. I got my entry below the order block. Guys, I am not just saying things. This is what I do. I was a little bit off with the first video, but you saw me trading NFP like this. When it goes up, I go down. But the decision here has to be more, like adrenaline rush has to be more here. It's not like everyday trade where I have to wait. If you trade every day without a news event, you trade nicely. During news event, you just wait, you don't trade, you don't do anything. You'll have nice, beautiful trades if you don't trade during events, because you don't have this hyper volume in the market. Yes, we need volume, but this is hyper volume in the market. So for your psychology sake, you want to trade when there's no volume. So as I see this is going up, I will annotate. If it's me trading NFP, you see me not trading live. I don't think anytime soon I will be trading NFP with any news with annotations, or I will be trading any news. I don't see myself doing that. But if I trade any news, I will try, but I don't see myself talking here because I'll do a lot of mistakes. So as I see this fair value gap, for me is entry. Stop loss riskier, but I see an order block. So I will be stupid if I put it. It's me, guys. It's not you. Now I'm saying me being stupid, not you. For me, I see this fair value gap. For me, it will be stupid if I enter here. For me, it will be stupid, real stupid, to put a stop loss here. For me now. So I would want to put my stop loss here. I'd rather go below the min threshold. Let me show you the ideal way to do it. Guys should appreciate this. This is live and I'm under pressure because I never prepared for this. So my stop loss should be below the stupidest one. So I would appreciate this, but I would even put it below this. But I know it's protected by this line. If price come back and hit this line, I know the setup has failed. You can see that the previous trade I posted, I don't like seeing violations of the PD arrays that I expect to be protected to go on a direction that I'm looking for. So this will be the first TP. Your first TP would be this high of NFP, the high of NFP. But besides the high of NFP, you have this highs right here. Besides those highs, I don't know about this line. Let me go back to 5 minutes and try to see. I can't remember about that line, sorry. Oh, you have those highs right there. That could have been your entry right there. So you could have got your 1:3.8 entry today AM session. I just took the macro because I was late. I could have known that we went for NFP for this, but it could have been a little bit hard for me to trust setup today. You saw when we get to NFP what happens. So let's forget about NFP. simple way. 1 hour fair value gap during the time you want to trade. I have 1 hour fair value gap. This is 10, and I have a gap before 10 right here. So the gap itself, it's my setup. Fair value gap, or I just have a gap. Whether a liquidity void or not a liquidity void, man. Is it the price imbalance? This is a gap. This is the reason why the price is going up during lunch. So I did not trade lunch because today my mind was not to trade lunch. I wanted to get the setup, the normal ordinary setup. So we'll utilize this. So the sell shouldn't have been an entry. Either this buys from here after this. Let's revisit the lower time frame and see what the price did during lunch, during AM session. I said the silver bullet, this is the only fair value gap that you have. This is the high. I doubt if they took the high, but this, the closest hanging fruit, this could have given you an entry. Remember your bias. You didn't know about the buy that you're going to take now. You only knew about this buy coming here. This is where everything comes in now. You only knew about the price coming here because you left this. You want to take the high and you couldn't take the high. Let me see if you couldn't take the high for here. I'll have to investigate even further. If you took the high, it's okay, but it's still not ideal. This is where you see me going out of the trade. This for me, I see this rejection. For me, if I target this, even the high, I don't even go for the high. Rejection block for me is enough. You see, I don't like to go late on the party. Guys, if you see me posting, you would see my entries are like this. This is me. Yes, I aim for this, but I will let the price go for this, not me. The rejection blocks, sometimes after this fair value gap, I go out. If I see a respect or doing anything like that, I go out. It's fine for me because I know price can oppose, maybe try to figure out something before it goes up. So for that, for me, it's enough. So this could have been your silver bullet entry, guys. We go long, you see a fair value gap plus order block. The fair value gap plus order block, 2 candles makes an order block. These 2 candles makes an order block. I don't want to say something that will, these 2 candles makes an order block, but sometimes 1 candle makes an order block by itself. So below the order block, it makes sense. Then I would want to target, boom, that's me. So that is my trade. I am that's silver bullet, that's closest hanging fruit. Go to lower time frame, you will even maybe see even further. Okay, taking out this and that. You see the retails now, it creates the double top. And then they will tell me that it's not happening, this is not working for ICT. But no, this was banked. This was banked for this time that we have. So you have your, let me go to, is it 15 minutes, the one that annotate well? Because now we are getting to the current price. Even if you don't trade, we have to annotate it. Live commentary. Now that even on 15 minutes, you have a 15 minutes fair value gap. You have a high that you did not reach. It came into a 15 minute, not just a 15 minutes fair value gap, but an order block. Guys, works like this. It went deeper, but it respected your order block. You could have been saved here. Below the consequent encouragement of a order block or below the low, you could have protected this. I wouldn't want to do that. Unless if my entry was based off an order block, but I wouldn't want to go that low. Unless if my entry was based off an order block body. Remember, you can take the whole candle. As you can see, the body close, but even the body sometimes it do for me. Even just the body, sometimes they do for me. So this time during body, I would have entered here. Stop loss, I don't want it to go below this. I'll still be in. So it went here. I entered. Yes, I entered there below. Even now it gave me a second chance during lunch. It came during lunch. It came. I'm still protected. So this is how you think. Now traders, be careful. This is how we think. If I get an entry there, this is how we think. Please, this is another bonus for you. Ideal entry is this one right here. We agreed with an order block right here. The ideal entry is this one, below the 50%, at least. TP, at least the high. 1 is to 2.3. You want to get an entry. What type of an entry should we get here? You want to get a buy when something is respected or when it drawdowns, okay, and allows you to protect your stops. So here you are going to act as if like you have entered the trade. Traders, please listen. Here you act, you see your TP is about to be hit, and remember your TP is this one. Sorry for that. It's 1 is to 2.4. Here you're going to act as if this is both AM session entry and this is right here now. I'm going long. Mean threshold right here, you remember? Let's go to 5 minutes. Was it 5 minutes? Yes, below the low. Everything is balanced. Below the low. This should work. Allow me to do this for you guys. Please allow me to do this for you. This should work. And I'm not saying, guys, I'm capable of doing this. I'm still on the learning curve, but I love the way that I learn. I'm still on the learning curve, but I love the way that I learn. So this is 1 is to 8.2. I want us to utilize this one is to 8.2. Now it's on 1 is to. Now it's on is 1 is to 5. So we'll get 1 is to 1 point something. 1 is to 2. As you can see, utilizing this, we can only get 1 is to 2 if we get this trade right here. You see? So let's remove this. Allow me to put this thing here. Just a little bit. So I'm still going for profit. I haven't hit the stop loss yet. So now what will happen? On a 5 minute, I will do this. Remember, I do not want anything that will tell me to go down. I'm going up. Between 2 to what? Between 2 to 3. Now, because it's evening, I will want to see a silver bullet being formed here going to my TP. If it goes to my TP now, listen to this, guys. If it goes to my TP now, before it gives me a fair value gap, this is what I will do. And it doesn't mean that it has to form a fair value gap during that time. We have a fair value gap right here. Plus we have fair value gaps, but this one, it's more appetizing for me because it has an order block. Took out the liquidity. So either it forms a fair value gap or it comes to this fair value gap, then we go above. Without that, I do not have a trade. If it goes now on this one, I might look for low onto this area or from here to this fair value gap. But that you must know, it should be a low probability trade. You either stay away or you risk less. The main trade is that draw into a fair value gap or create a fair value gap. I understand this one as well because this is an order block. But the main thing, if you see me not going up, you must know that I'm offside. If you see me not favoring going up, I'm offside. This one, sorry for that. This one we can violate for a while. Sorry for that. This one we can violate at least for a while. This one we can violate. If we violate this one, I will still hold. But as we get here, it means I'll go to the lower time frame and look for the model that allows me to go there. So this could have been entry, but it's not my entry. This could have been an entry. Remember 130, I wanted to talk about 130. Remember 130, it will run to a certain liquidity. It's also a Judah swing. I take 130 as a Judah swing. There's boom coming up. So from here, this is an entry, by the way, for me, but I want to enter it here. I want to enter it here. Sorry for that, I was attending to a call. So this could have left me. It's still fine, but for now I wanted to do this for you guys. I wanted to do this for you. If it gives me a re-entry here, if it comes and gives me a re-entry here, but when I'm in here, or if it creates a fair value gap going down, invasion fair value gap is the idea that I would want to utilize. Then this candle or this low, but I can utilize below the 50%. Remember, everything that I'm talking about, it's everything that I've said before. So it's 2.5. This can be an entry, but this can be violated because remember I said we talked about the fair value gap being created inside. It's even better, but we can utilize the fair value gaps that comes with it. But the ones that are created inside, they are even better. And you can get the micro right here. You can get a fair value gap right here just for price to go below this lows and come here to go up. I would let that one go. I would want to see market structure shift, some sort of a model right here to go even high. So if that's the case, it means I will enter here. The stop loss needs to be here below the consequent encouragement. I doubt if this is below. I do not have to put my stop loss below this stop loss. These stop losses. These are my protection fees. And this one will be in drawdown when I enter. Will it? No, it won't be in drawdown. This one will still be in profit when I enter. I don't know what I was watching. This is, remember, at least 1.5 or 1:2. That's 1:2. That should be your honest entry. Because we are running for 1:8. So guys, I guess let me not waste time, guys, and attend to other errands. So I will tell you if it goes, because if I sit with you here, I don't think I will spend even more than 15 minutes. I will, on the next video, guys, I will post maybe a result, the screenshot of this result. I have to press it to post it, and if I have to trade, maybe if I have to enter a trade on this one, I will maybe make a screenshot or a short video entering the trade. I'm still figuring out on how to edit the videos right there, so I will utilize that, and after utilizing that, I will maybe just try to post a short screen video, but you would know when it comes if I trade. You would know where it comes, where it's coming from. But anyway, guys, try to do this by yourself. I was just feeling myself to give you this. I've even given you more. If you repeat this video, watch this video next day, it will make sense. If you have an idea, it will make sense for you. You go back to bus driver model. I mean to say, it will also make sense to you, whatever is it that we'll be talking about. It was my wish. We were left where we were left here. We were left here to enter, but this time I wasn't going to do any other video. We were left here to enter because the 10 a.m. is the one that created a fair value gap, and then we went into it. And you know, when we go up, down, we utilize this to do what? We utilize this to get our buys. We don't buy here. This is the reason why we don't buy here, guys. See, if I buy here, it's going down. So if I buy here, it gives me a chance to do what? It gives me a chance to secure. It gives me a chance to get my profit. Some of you don't need 1:2. Some of you need 1:2. Let's go to 1:2. Some of you just need one. Yes. Some of you need 1:2. You got your entry, you got your trade, and it went back against, but it did not go against you. But you got a trade. You won a trade. It's a plus win. Plus 2 trades for you here. Some of you, you more like others, you are fighting for 1 is to 8, you are on 1 is to 5. You have secured. On 1 is to 8, don't expect to get 1 is to 8. On 1 is to 8, don't expect to get the profit for 1 is to 8 when you are targeting 1 is to 8. That's being stupid. On 1 is to 8, expect to get 1 is to 5. 1 is to 6 at least. Do not expect 1 is to 4 is still fine on 1 is to 8, because you keep on securing along the way. That's a good trade. So guys, I will have to see you on the next video. I don't promise anything about this, what will happen, but as we shared this, I wish this was a live on YouTube so that maybe some of you would watch this and continue watching this. But I will continue with my group on WhatsApp, and then I will conscientize them about this video. Then I'll continue with them on WhatsApp so that we can see what we can do. But if this opportunity does not appetize very well, I will have to let it go, because as it comes here, yes, I'm going to look at the lower time frame model there. The model I'm going to look at the lower time frame, but I want to see it respect here if it's gonna go up. If it gives me, yes, I don't want to see it go violate this. If it starts to violate this, I'm out. I'm not doing anything else. I will let it come here if it wants to, but if it doesn't, I have to wait for fair value gap that needs to be formed during this time, and then let the one that work. Or it could just leave us. How does it leave us? It leave us because we had an entry right here. Now we're thinking buys. If we are buying, shouldn't we disrespect these areas right here? If we really, oh, this is not a fair value. I thought they were fair value gaps. These are balance price range. Allow me guys to remove these things, as I want to see the price for what it is, as long as this doesn't disrespect anything else. So if I'm buying, I want to see myself disrespecting these areas. How do I disrespect them? I have only this fair value gap right here, of which is a second hand. It was disrespected right there, and then it was never retested. So I might, and then it ends here, and then we can get a mohawk. I might get this entry right here. So this is the point of interest right there. This one is the point of interest as well. If we go down, I like to put it right there. This is the point of interest as well. Let it not clutter the chart. This is the point of interest as well as an invasion fair value gap, plus fair value gap and fair value gap. This one. So if price go low, you see, this can be a macro. You can have this market structure shift right here, and you have a fair value gap right there. You enter based off that fair value gap, you come into this. Because if you miss this entry right here, the one that occurs right here, you might as well miss an entry. This might be on Monday, and when it comes on Monday, it might come with a jump. So you might have as well missed it. So here I guess I will play but what is this? I'm now offside. Here I guess I will have to play a silver bullet. Only silver bullet. I know the bias, I know everything, so the only thing that is left with me is the model. And you can look and watch this before it takes. We took the low. This was market structure shift. This is the reason why it entered. It went above. So okay, this is the one. So I'm looking for continuation to go above. We have a small bit of a fair value gap right there. So yeah, I'm still holding on to this if we don't come here. But if we come here now, we should come here and create a fair value gap, and that fair value gap should take us here. So it's 1 to 2. Internally, I want to come here. I want to break this and come here. Or come here, break that. We can utilize it in this one right here. Let's see an hourly order block. It's very important as well. Where's an hourly order block? It's also important at this point. It's this one. So this is a real draw on liquidity for me. Not order block, I mean to say hourly fair value gap. Did I say order block there? I don't remember. But not order block, I mean hourly fair value gap. It's right there. I can see price moving away from this, came here. But I suspect price will drop here. Drop, see. This right here. This fair value gap of which it worked. That's what concerns me. Is the reason why I wanna go low. Anyway, guys, let me not waste your time. I'll give you a feedback of what happens, but I told you that if you don't see me hoping for the highs, I'm offside. Everything else that I do, I need to buy to this side. I'm not against the fact that we might get a buy signal here, buy sign here to go above. I would still do that if it allows me to give me 1:2 or above, 1:1.5 or above, and it's appetizing. But for me, that would be a low probability trade. So I rather watch that than participating. Then it feels good. Day trading doesn't mean it's everyday trading though. But plus it was NFP, no day to trade. So guys, I hope and believe that you guys have a fun during this video. Hopefully next time we'll produce or will release better than this, more entertaining. But I bet, guys, today I was feeling myself. Now I feel a little bit tired, but I was really feeling myself. This is the reason why I started this video. I wasn't planning to do any video trade. I was just wanted to see. Plus I was late to come in, so I just wanted to get that trade and move on. But something told me that you can stay for lunch and do this. So without wasting any time, guys, let me see you on the next video.